Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 22nd of March 2025, and we're providing our regular weekly update for the week ending the 21st of March. Gold rose again last week, though we did see some fallback on Friday. What's likely to happen to gold and silver this coming week? Well, to find out, let's take a look. Okay, gold rose $36 last week, rising from $2,988 to $3,024, having hit a high of $3,058 and a low of $2,983. That was a rise of 1.2%. Gold spread between high and low was $75, about $50 less than last week. Now, last week we predicted gold would trade between $2,925 and $3,075, which is what happened, and closed mid-range. In sterling terms, gold went up £29, closing at £2,346, and in euros, it went up €51, closing at €2,802. Now, silver fared less well. It actually fell 73 cents, moving from $33.83 to $33.10. Having hit a high of $34.49 and a low of $32.70, a fall of 2.2%. The difference between its high and low was $1.79. Now, last week we predicted silver would trade between $32.50 and $35, which is exactly what occurred. In sterling terms, silver was down 59 pence, closing at £25.63, and in euros it was down 0.47, that's almost half a euro, at 30.68 euros. The gold to silver ratio rose quite strongly by 3 points, moving from 88.3 to 1 to 91.4 to 1. Bitcoin currently stands at $84,400. That's up $2,000 on the week. Now, equities were marginally higher. Dow Jones up 497 points at 41,985. The S&P 500 up 29 points at 5,667. The Nasdaq Composite up 30 points at 17,784. And the FTSE 100 up 14 points at 8,646. We've seen equities take quite a hammering since President Trump's inauguration. Oils were higher. Brent crude up $1.58 at $72.16. And WTI crude up $1.10 at $68.28. The dollar index was also up, almost half a point, not quite, 0.37 points, at 104.08. Now, last week we advised looking out for Monday's retail sales figures for February, which came in at plus 0.2%, compared with expectations of 0.6%, and Tuesday's import price index for February remaining at 0.4%. Unchanged from the previous month. On Wednesday, the FOMC of the Federal Reserve gave its decision on interest rates, which basically were unchanged. But they did provide an overall message, which basically highlighted that the Fed sees higher inflation and slower US economic growth due to uncertainty primarily tied to Trump's tariffs. Now, that said, it did suggest that the Fed is still, nevertheless, expecting 2 rate cuts in 2025, but Fed Chair Jerome Powell said he and his colleagues were reluctant to make any changes until they get more clarity on how the economy responds to new tariffs. So, as we've said, nothing's going to happen certainly before June, but there's every possibility. If there is a rate cut, it could even be later, but we still have our money on June. Comments on GDP were undoubtedly detrimental to the silver price, as the bank cut its forecast for GDP this year to 1.7% from the original forecast of 2.1%. Just to put this into context, GDP for both 2022 and 2023 was in fact 3%. So cutting the forecast to 1.7 is not really good news. This coming week, we have on Monday flash PMIs, that's services and manufacturing. Consumer confidence figures on Tuesdays. It's the second revision of GDP on Thursday, and the PCE inflation data on Friday. So all eyes will certainly be on Friday. Markets are expecting the year-over-year PCE rate to remain unchanged at 2.5%, and the core year-over-year rate to rise from 2.6 to 2.7. Now, although gold fell back a little on Friday, primarily due to increasing US dollar strength, we must not forget that geopolitical risks still remain a key driver. Israel escalated its military campaign in Gaza, ending a 2-month ceasefire, while US-China trade tensions also linger. Now, technically, gold has support at the 50-day moving average level of $2,867 and resistance at this week's high of $3,058. The PCE figures due on Friday, or the anticipation of them, could and probably will indeed affect this coming week's direction for gold. We said last week we remained bullish, though a number of our subscribers thought a fall was due last week. Well, it did happen slightly in silver, but not in gold. We're still moderately bullish under the geopolitical uncertainty that we're currently experiencing and really needs to be overcome. Silver was undoubtedly affected by the Fed raising its inflation forecast to 2.7%, thereby dampening hopes for aggressive rate cuts. Weak China demand and a global reduction in GDP growth is weighing on short-term sentiment. Now, silver has support at around the $32.50 level, and particularly at the 50-day EMA of $32.35. This is technical stuff, and of course, doesn't necessarily bear out. But we have seen quite a few people buying at that $32.35 level. $34 is highly resistive, as any attempts to breach this are indeed short-lived. They're being achieved, but they're not lasting for long. Now, earlier today, being Saturday, Israel struck Lebanon with artillery and airstrikes in response to cross-border rocket fire. And these tensions will, in our view, short-term, help to underpin precious metal prices, regardless of what else is happening in terms of economic data. So with this in mind, we expect to see gold trade this coming week between $2,975 and $3,075, with $2,950 and $3,100 as outliers. Without the geopolitical tensions, we could very well see gold trade $50 lower than this. But while these tensions remain, then we're relatively confident that $2,950 to $3,100 will hold. Silver we expect to trade between $31.75 and $34, with $31.50 and $34.50 as outliers. We may get a bounce back on silver, though, again, until we know what's going to happen on the PCE rate, we want to be a little bit cautious. But what do you think? As always, we'd appreciate it if you would share your thoughts. Meanwhile, please give this video a thumbs up, subscribe, press the bell sign, pop on over to our sister channel, Finances Do Matter, and sign up there. And let's all have a really positive and profitable week. One thing's for sure, it's not going to be boring.